Good morning, everyone. Thank you for taking the time to connect to our quarterly call. Together with me, Sri Kumar, Gabriele Bonfiglioli, and together we will run you through this beginning of the year, which is certainly intense, like 2020, particularly for Italy, also from a political perspective. Sri Kumar will go through, as usual, to the perspective from a macro point of view. I will run you through some of the thoughts that we are elaborating strategically looking forward, and Gabriele, as usual, will go through the details of the outlook for the real estate market. You can make questions. You see the chat on your right. We will see the questions, and at the end of the presentation, we will respond to as much as possible according to the time remaining. So thank you again for taking the time, and let me pass to Sri to start the presentation.
Thank you very much, Manfredi, and welcome, everyone. The title of the presentation, the macro presentation today, is Italy 2021 Year of Stabilization. I had mentioned in the previous call that we would have strong growth to begin with in 2020, but then the continuation would depend on how the COVID virus and the fight against it progresses. We will talk about how Italy has done, along with the rest of the European Union, the changes that are taking place in terms of Europe, in terms of combating the disease and causing economic recovery. Then we go to talk also about the global stimulus picture and run you through what the Italian policy makers are doing, and then go very much into Italian economics and politics. And I'd like to end with the developments that are likely to take place in 2021 and the outlook for the medium term as far as Italy is concerned. If we turn to the slide that you have showing, it says fresh COVID waves hit Europe. And what has happened is that countries have moved in and out of lockdowns. They removed the lockdown in order to help their businesses, restaurants, airlines, hotels to come back. And as they did that, the virus spread again and they had to shut down. And this has been the case with all of the different countries in Europe. It has also happened in the various states within the United States. So it has become a general phenomenon that the opening is followed quickly by a lockdown. The WHO, the World Health Organization, has said that the restrictions ought to continue, but the problem there is when the restrictions continue, the businesses get hit, so the governments often face a trade-off between the two. Government spending is up very sharply in the different countries, and we'll have some indication of what is happening on the viewpoint in both Europe and in the United States. The European Central Bank has introduced a program called the Pandemic Emergency Purchase Program. It was introduced soon after COVID began with 750 billion euros. It currently stands at 1.85 trillion, almost 2 trillion euros, and the ECB is able to purchase assets of different kinds, debt as well as equity. And the advantage here is some of the credit criteria have been set aside in the case of dealing even with Greek obligations, for example. That is to tell the countries that the central bank is backing them and the credit considerations will not stop their ability to borrow. New vaccines have come in. They are starting to become more prevalent, and once they are widely expected, and in the case of the European Union, the expectation is a good part of the adult population will be vaccinated by the end of summer, and in which case that is going to be a positive for the economies in the second half of 2021. let us go quickly to the next slide, which shows the confirmed coronavirus crisis cases. And you can see that after it was relatively low for several months, once again, with the opening of the economy, the cases have shot up. Italy is not alone. There has been a big surge of cases, for example, in the case of Germany. So it is a generally prevalent phenomenon. Let's go to the next slide, where we talk about what the global situation. And in the United States, one virus expert has talked about surge upon surge upon surge of the virus as you go from December 2020 to March 2021, meaning there will be an exponential increase in the virus incidence. So the quarter that we are in is going to be the most difficult quarter as far as the illness is concerned, despite the rollout of the vaccines. Germany, as I already mentioned, has had a big increase in the virus incidence, and the European Union was somewhat slow in rolling out the vaccine because of difficulties in dealing with the manufacturers. Now I think it appears to have been smoothed out, so the process should go more smoothly now than it has done so far. And with a good proportion of the population vaccinated by summer, as I said, should be a positive development. To finish up, even Chinese manufacturing is showing signs of weakening after initially picking up in 2020 from the coronavirus. They also had difficulties more recently in January in terms of some of their economic indicators. Let's go to the next slide, where we talk about how the policy makers are responding. In the case of the United States, we have had $4 trillion worth of government spending exclusively oriented toward COVID relief during 2020. And I anticipate at least $2 trillion more this year for a total of at least $6 trillion worth. So it's a massive amount of stimulus that is being applied. The Federal Reserve has been purchasing bonds at the rate of $120 billion per month, both government treasuries as well as mortgage-backed securities, and that has kept interest rates very, very low, and the monetary conditions have been very easy. And as a result of the development, the central bank's balance sheet, Federal Reserves, has increased from about $4 trillion at the beginning of 2020 to about $7 trillion today. So a big, massive increase in the assets of the central bank simply in 1 year. Coming to Europe, Europe and Italy have loosened purse strings. Different purchase programs, spending programs are meant to help the unemployed, and that has been a big positive. A few days ago, the European Central Bank had its monthly meeting, and President Christine Lagarde has promised ample monetary stimulus. She realizes, she said, that the virus is still a big issue, and she will do nothing to stop the stimulus from continuing. Even though the ECB did not promise more relief at that meeting, the expectation is that it stands ready to provide a nice backup if the region needs it. And so the other point to make here is that the European Union has issued a 750 billion euro bond, which is a common bond obligation of the entire region. And it is the first time the European Union has such a massive amount of a bond package. And it is the first time also that the obligation will not be that of any single country, but it will be borne by the total European Union. What is significant about that? Italy is going to be the biggest beneficiary of the 750 billion euros. The expectation is that they will get about 200 billion euros out of 750, perhaps a bit more. To get it, Italy has to show progress in terms of its reforms, changes on the labor practices, and so on. And that is a big part of the positive expectation that is coming from the Italian side. Let's go to the next slide. What is the European Central Bank doing? And you can see the big increase in the balance sheet that has taken place during calendar year 2020 and in the early part of 2021. And the European Central Bank now has about 7 trillion euros worth of assets. And this is coming from the PEPP program that it is implementing. Let's go now to Italy. The next slide, we talk about what are the challenges Italy faces in economics and politics. While they had a significant increase in growth in the second quarter, in the third quarter, there was again, they had a big increase after the stimulus was applied, but we learned that there has been a sharp decline in GDP in the recent months. However, the economic sentiment has risen in the month of January. Why is this the case? And as we will see in the slide, it increased because exports to Asian countries have increased, and that has been a positive for Italy. Keep in mind that Italian GDP consists about 1/3 coming from the export sector, and exports being very strong has been a positive stimulus for the economy. Consumer confidence has stabilized, and that in turn is because of the unemployment benefit payments that the government has paid. On the other hand, the overall economy has gone through a lockdown. It is negative, and that is hitting the economy in the short term. On the political side, Italy has had a change in prime ministers. Mr. Conte, the previous prime minister, lost his majority support, and the president of the republic invited Mario Draghi, the former head of the European Central Bank, to become the prime minister. This has been widely welcomed. The different political parties have agreed to work with Mr. Draghi. Why is this the case? One, because he has a very good reputation from Europe. Second, he has good global contacts to help Italy during this point of difficulties. The expectation is that he will continue to be a prime minister for another year. And when President Sergio Mattarella retires, Mr. Draghi would take his position, call for elections to order for an orderly transition, which I think would be very positive. Let's go to the next slide, where we talk about some of the points I made. Economic sentiment index, you can see that increasing December and January. The expectation is it will plateau a bit, but then start to increase again as the vaccine is rolled out, probably by the middle of 2021. Let's go to the next slide, where we talk about the consumer confidence index. And you can see that while we haven't returned to the pre-pandemic level, we have risen from the low point, and we are starting to stabilize as a result of some of the measures the government has undertaken, as I told you a couple of minutes ago. How have the investors responded? Let's go to the next slide, and you will see there the reference to the Italian 10-year bond, and the market is showing that the Italian bond yield has come down significantly. Why is this taking place? One, the backing provided by the European Central Bank, the purchase of Italian paper is causing the bond yields to go down. Second, it is coming down because Italian yields are very attractive in comparison with a zero interest rate yield in parts of the world, and investors are getting the higher return as they get from Italy. And what is the significance of the interest rate coming down? For other asset classes such as real estate, it helps the cap rate remain low. It helps the other sectors to remain attractive because of the fall in the yield on the part of the sovereign bond, and that is the significance of this chart. Let's go to the next slide, where we talk in terms of the investor view of the Italy-Germany 10-year yield spread. And you can see that it was very high soon after COVID, but it has come down significantly. This chart shows it having come down to 1.2% But in the last couple of days, it has fallen even further to 1.11%. So this spread is an important measure of the additional Italy country risk relative to Germany, which is considered to be risk-free. So what the markets are showing, what the investors are showing, is that they are not demanding a high spread for Italy versus Germany because they are more comfortable with the Italian risk than they were before. And that is the significance of this chart. Let's go to the next slide, talking about two negatives that Italy faces. One, on the inflation rate for 8 successive months, the inflation rate, this is the annual measure, year-on-year inflation on the last 8 months has been negative. What is bad about that? When inflation is negative, there is a tendency for both consumers and companies to postpone spending. After all, you can purchase what you want at a lower price a year from now rather than today, so why spend today? That usually causes a slowdown or a drop in growth, and that's why European Central Bank wants to avoid that. The latest month, which is not shown on this chart, has January, which just came out with a positive 0.2% inflation rate for Italy. The Eurozone inflation rate is also positive, and these are both very significant developments as we look forward. Let us go to the next slide, where we talk about the second headwind. This is coming from outside of Italy, outside of the Eurozone, namely that the euro exchange rate has appreciated significantly from the beginning of 2020, from about $1.12 and today trading at about $1.21. This is negative for two reasons. An appreciation of the currency depresses domestic prices. That is one negative. Second, it is a headwind on the export sector. But as we have seen, Italy continues to maintain its exports at a strong basis despite the strength of the euro, and that is, I think, a positive development from the Italian viewpoint. Let's go to the next slide, talk about politics, which is very important in the current situation. The COVID spread weakened the outgoing prime minister. He lost his majority support when a small party headed by Matteo Renzi, the former prime minister, pulled its support, and therefore the government essentially fell. But I don't believe that the leadership change is a long-term risk. Mr. Draghi taking over the next government is likely to be a big positive, and he is considered to be a technocrat. And I compare the situation with the president bringing in Mario Monti, another gentleman with experience in the European Union, and also considered a technocrat, brought in when the Italy 10-year bond yield was 7% at the end of 2011. Within a couple of years, he brought it down to less than 4% with the corrective measures which were taken between 2011 and 2013, with the help, of course, of Mr. Draghi, who was then the head of the European Central Bank and whose policies also helped Euro and Italy during that time. So all of these developments are seen positively, even by the Italian political parties, not just by the market. And finally, with Mr. Draghi being the prime minister, the European Union will be supportive of the measures that he's taking, and therefore, rather than take measures on his own, he would be able to do that in consultation with the much bigger body that governs the European Union. Let's go to the next slide in terms of some concluding remarks. One, I want to make the point that the new wave, a COVID wave in Italy and the Eurozone, delays recovery, does not prevent it. We had thought that the recovery would begin about the first or second quarter of 2021. More now, it looks like it is postponed to the second half of 2021 after the vaccine rollout becomes more prevalent. That 2022 it will be a year of strong economic growth, again, both for Italy and for the Eurozone. I expect as well that the European Union, European Central Bank, will continue to provide the support, and that will be a positive. And once again, for various investment classes, the medium-term outlook remains positive, even though the first half of 2021 is going to be a very difficult period. Let me stop and turn it back to you. Thank you all.
Thank you, Sri. So let me proceed going through some consideration about Italy, and also with a focus about regeneration of physical infrastructure as an important driver for the economy looking forward. So let's start from a few comments about Draghi taking over from our friend Sri. So the crisis that started with the Renzi withdrawal in January 13 has been relatively stable from a spread perspective, which has remained roughly unchanged until Mario Draghi has been indicated from the president of the country. Thereafter, we had the dynamic that Sri was reminding in terms of improvement, narrowing the gaps between the BTP and the Bund on a 10 years horizon. The next steps of the government will be relatively quickly, because this week, as we know, Draghi has completed the second consultation, and tomorrow is expected to meet with the president of the nation, and present the minister that he would like to have in his team. Beginning of next week, it will be the time when, if everything moves smoothly, Mr. Draghi will present the government to the parliament for the vote. So we see this obviously as very positive, and it will accelerate a number of priorities on the agenda, which have been shared with the different stakeholders, both political party and business community. The acceleration of the vaccination campaign, like in every country, will be probably the number one priority, which is contingent but fundamental to restart the economy as soon as possible. Let's also have a look to the main Italian cities, Milan and Rome, as well involved in the political dynamics, because both cities will have the election of the mayor. In Milan, Mayor Sala, the current mayor, has announced to be candidate for the next round, and this has been last December. And urban regeneration will be very important in Milan on the agenda, on top of the agenda, and those images reflect some of the railway yards dismissed that will be part of major urban regeneration in the city. And this obviously goes with upgrading the city, also matching the agenda dictated by Next Generation EU regarding the ecological transition and digitalization of cities, as well as social inclusion. Not dissimilar is Rome. Rome will have election this year, so both are expected by the summer. They might be postponed a few months because of COVID, but in any case, during this year. Similarly to Milan, the current candidate, Virginia Raggi, the current mayor, is running again for the next election, and some of the names of other candidates are coming out in the potential running for the election. While in Milan, as you saw, the candidates from the center-right has not been announced yet. Rome, similarly to Milan, has even more the urban regeneration as a top priority, more because Rome has been more stable in these years in terms of new projects and new regeneration. So let's have a little dive into the Recovery and Resiliency Facility. As Sri was anticipating, this will have a major impact in Europe, but certainly in Italy. Italy will be the largest beneficiary of the program with 28% of the allocated amount. Just as a comparison, Italy was a 9% allocation for the Marshall Plan. And the timeline for deploying the funds are actually pretty tight, because by 2022, 70% of the funds needs to be committed, 2023 the residual 30%, and projects needs to be completed by 2026. The map of or the criteria to identify the projects are very much around 3 guidelines and 6 missions. The 3 guidelines include the ecological transition, the social factors, and the digitalization. Each of them obviously matching the ESG metrics. The 6th mission regards the ecological transition, the mobility, as far as the first pillar, the education and research, inclusion and health regarding the 2nd pillar, and the modernization or digitalizations for the 3rd pillar. If we look a little bit about the possible dynamic on allocation of the capital, the overall size of the funds to Italy have been increased to 211 billion in January 2021. Overall is a 15 million increase. There has been debate about how to allocate the capital on the different investment bucket. And in particular, what you see is the difference between January 2021 and December 2020. Clearly, this allocation will have to go through the final recommendation and final program, which will be defined by the next government and hopefully by Mario Draghi. But you can see some dynamics. So the 25 million reallocation between December and January, and the 25 million include the increase of 50 million plus reallocation of 10 million. Fundamentally have been concentrated in infrastructure for sustainable mobility, education and research, inclusion and cohesion. Some of this capital, 10 million, comes from green revolution and ecological transition and digitalization. We started mapping the implications and the priority, start setting the agenda for physical infrastructure. And this is more from the Coima perspective. So as you can see, we have respected the different pillars and classified according to the ESG title. So you have the first pillar, which is the green revolution and ecological transition and the infrastructure for sustainable mobility under environmental, the education and research, inclusion, cohesion, health under social, and the growth for the digitalization and innovation. And we start filling what will be relevant within this pillar from a physical infrastructure perspective. So, for example, in the environmental, we have all the themes about certified buildings and decarbonizations and so on. For the social, there is all the part of upgrading schools rather than filling the gap which we know Italy has between the center, north, and south, being very important, or about the emergency of living in terms of affordable living and PRS. As far as the health and the upgrading of hospital and healthcare infrastructure will be very important. And on the growth sides, regeneration of district, not differently from what I was pointing out as top in the priority of the agenda of both Milan and Rome for this missed area, but as well as everything that help the digitalizations and infrastructure on the territory. We have been very active raising a fund, which is an ESG impact fund, which has closed with the first 400 million and going through the second closing. And we are studying how to being an active contributor to this agenda with partners on the different bucket which reflect the priority that we see in the agenda of the physical infrastructure deployment of the recovery fund, the recovery facilities. Our estimate is that 15% of the overall national plan can be allocated to upgrading physical infrastructure. Let me conclude with some examples which bring you a little bit in our kitchen, let's put it this way. So this is a project that is just completed. So we completed during COVID on time, and it's fully pre-leased to Accenture and Bending Spoon. It's a reuse of a building. It's very much on the agenda of the priority in urban regeneration that we set for ourselves and together with our investors, anticipating the agenda that we see for the country looking forward. So this is a building that regenerates multiple public space, surrounding, reconnect with the rest of the city, has a high level of performance from an energy perspective. Digitalization has been very much driving the development of this project with an infrastructure for data analytics and has all the certification. Let me go through another example. This is more in the kitchen, I would say. We're working on this, but I think it's interesting to see also to make this presentation also with real cases. This is a very important development in Milan, is in the Porta Nuova area, and it's important because it's a reuse of a building, the one that you see on the right, and at the same time the development of a new building and the mission to reconnect all the public space surrounding this project. So let me go through this project as an example with a video, which I would ask to activate. So this project stands right in the middle of a park, which is both on the left and on the right. It's an existing building which we look to entirely regenerate and expand with the respect of the original architecture on one side and a complete renewal from the opposite side in order to make it efficient and in line with the current use that is expected, the future use that is expected. Elizabeth Diller, part of the Diller Scorfidio design team, has designed this building together with Stefano Boeri. The bridge that you see is an existing bridge. It was a horizontal building which we expect to basically polish and transform into a greenhouse, open public, and self-sustainable from an economic perspective, and becoming a hub for climate change in the city, but also with an ambition to become a place of research at global level. On the other side of the spectrum, we are designing together with Stefano Boeri, long-term friends and professional with whom we develop the Bosco Verticale, which fundamentally has developed a new format of a highly sustainable residential tower. So it becomes an organism starting from the existing building of the 60s, which, as you can see, as a condition to set a highly sustainable development specific of the complex from a sustainability perspective of innovation in terms of technology and impact. This, as you can see, is the bridge that will be open to the public and connect to the park from the two sides. Inside, there will be a greenhouse and a number of activities for education. So in collaboration with schools, a university, and research center. And it will be open basically every day, all week. And it will include also a number of activities with the aim to activate the place 24/7, as well as to generate income out of the bridge to make it economically sustainable and repay operating costs. For example, this is an area which is dedicated to event, and they can be obviously of a variety. The bridge has at the top floor a food and beverage facility, which will be open to the public, as you can see, and will be under this glass roof, which fundamentally will wrap the bridge and protect the nature that will be developed inside. So you can see easily now going down from the stairs back into the park, where we can have also events engaging the park and involving obviously the community and the neighborhoods and tourists. This is a view from the south that go through the complex under the greenhouse, which is, as I was telling you, an existing bridge, which is completely regenerated. And this is the view from the opposite side, where you can see the reuse building, the event place, the greenhouse, and the residential buildings. So this was a way to run you through a little bit the work that we're doing, rethinking in a visionary way, but well rooted on the economics, new projects and reuse. So to conclude and to pass to Gabriele to run you through the market in more details, we definitely see a period in front of us as Coima, as well as Italy, but more generally on a global basis, where we will need to regenerate very much the physical space into something that will be partially different from the past. And this will require expertise, intelligence, creativity in order to transform physical assets into the next mode that we will live. So between 2017 and 2019, we have invested the Coima Opportunity Fund with assembling a number of strategic projects for over 1.5 billion of gross asset value. In 2020, with the Impact Fund, we have already acquired a large project, a large portfolio in the center of Milan to be reused. So it will be regenerated with a reuse strategy. And we acquired the Porta Romana railway yard. And looking forward, we look to focus very much on regeneration projects with a strategy which is primarily development to core and ranging on a different asset class with a focus on residential PRS and office of the future, particularly with an approach of neighborhood scale development and infrastructure related urban regeneration. So thank you, and let me pass to Gabriele.
Thank you, Manfredi, and good morning to everyone. I will now give you an overview of the Italian real estate market and the underlying trends that we are seeing. If we see at the investment market, in particular transactions, 2020 has closed at about 9 billion of transactions, with a drop of about 28% comparing to 2019. The majority of transactions have been in the office and logistics sector, accounting for about 60% of the overall volumes. If we see at the different sectors and the trends that we expect, we will see a recovery which will be very differentiated. Logistics has very strong fundamental. We all know for what is happening with the e-commerce growth. Residential will be the next asset class to watch, and we'll have a focus later in the presentation. Office, there have been good transactions, some good transactions also on the leasing side, and we'll also dig more in terms of the impact of remote working that we expect. Hospitality and retail, in particular retail, is lagging behind, and there is very low demand, in particular if we consider shopping center and everything that is secondary. Looking at the investors' universe, what is interesting to see is that there is still appetite from both international and Italian investors. Italian investors are growing. In 2020, despite the pandemic, they've grown in terms of acquisition, accounting for about 40% of the total transaction volumes. And they see with this low yields environment, in particular Italian pension fund, they see the opportunity to invest in the real estate. If we look at the yields and transactions, there has been a downward pressure in terms of yields. Yields and some transactions have been even below what is quoted as prime yield. 2.85 was the prime yield reach. So when there is a good quality, well-located building, there is a very strong demand, which is pushing down the prime yields. And this has happened in Milan, also in Rome, where yields have gone from around 3-5%. There was two asset close in the CBD, and in particular one where been received about 5 binding offer. If we diverge from core and we go to what is not primary or more complex transaction, in particular value-added and development, we are noticing lower availability of financing with leverage coming down. So this has a consequence on two sides. Secondary assets become riskier, and there is a downward pressure on price, while value-added and development are seeing less competition, because in particular the private equity that have normally worked with high leverage and have high double digits returns are becoming less competitive, and this can represent a window opportunity. If we look at the leasing market, it's not a surprise that transaction volumes have gone down. We have closed both in Milan and Rome the year with minus 40% in Milan, minus 55% in Rome. And this is due from the tenants which are taking more time they have taken, in particular in 2020, more time to choose and decide about moving during the pandemic. In the last weeks, and since January, we have seen a picked up in the interest of tenants. Interest, which is mainly focused on quality buildings, and here you see some example. And the takeaway of this is when there is a building with very good quality, the rental level is maintained. So there are some examples of transaction, in particular one in the semi-center, even you see even higher than the quoted prime rent. And this is because still in the Milan market and also Rome, there is a scarcity of good quality buildings in terms of grade A, compared to other European markets that is maintaining price. What we could expect is an increase in time to let and in incentives, in particular in 2020-21. Last October, if you remember, we presented a study digging more on what would be the future of office, in particular with the wide spread of remote working. In this study, the part one of this study, we showed that Italy was lagging behind. You could see 5% against an European average of 17% of adoption. And we for sure saw a trend of increase in the adoption. In that study, we tried to estimate what would be the effect of the remote working on the office demand. And the two of the key takeaways are, you can see on the left, we expect in the coming years to have a different allocation in terms of common areas and desk, with the ratio changing from 60-40 more to 40-60. And this to privilege more communicative and collaborative space. And then we did 3 different scenarios of potential remote working adoption, from low to high adoption, involving up to 90% of the employers 3 days a week. And these scenarios translated in estimate in potential decrease for office space for companies between 5 and 30%, depending on the level of the adoption. And we also see as a trend for the future that the demand from tenants would be very much concentrated in those that we defined as qualified neighborhoods. So neighborhoods with better service, better amenities, better connectivities, which already in the past 5 years had attracted the majority of demand. You see on the right some examples in Milan, like Porta Romana, Porta Nuova, the CBD, and some other also in the periphery, which had registered a demand 1.5 times higher than those that we call undifferentiated neighborhoods, also with a lower vacancy. So we see for the coming years a strengthening of this trend. To bring this study to another level, and so to test also our assumptions, so what we did in the last week was a survey which has been carried on between October and January with 38 corporates, predominantly based in Milan, which account for different sectors, over 500,000 square meters and over 30,000 employees. So to ask questions and understand what were our assumptions in the studies would have been how would have been tested from this survey. The findings are very much in line with what we were expecting. Here you can see some of the major conclusions of the study. We'll publish today, so we will have the opportunity to read all details. But companies expect to increase the remote work from 1 day to 2.5 days per week, lowering the density of the office to about 70%. So this will bring also a layout with more common areas and less office and desk space. And companies expect to need less office space, estimating in the medium long term about 10% compared to today's requirement. Another two key takeaways is that not the price will be the major driver of decisions to move, but more the location, the neighborhood, the flexibility, and the quality of the building. In particular, with sustainability, which considered in a broader term, so sustainability on the building of the community, but also of the quality of living of the employments as a key factor in taking the decision. I wanted to spend some words also, more details on a sector where you'll hear much more in the coming months, in particular in the Italian market, is the residential sector, and in particular residential for rent. Europe, which is lagging behind the United States, is about 66 billion, and we have included also UK in Europe. We are not big fans of Brexit, as you can see. But Italy all transactions account for less than 1% of the total European volume, but have been growing. You can see in 2020 there has been an increase of over 8 times compared to the past 2 years. And still there is a tremendous space to improvement, because the institutional transaction represent only 0.6% of the total annual Italian residential transaction. Transaction volumes, and this is not only institutional, you can see have been in line with the past years, but also on pricing there is a good opportunity, because if we compare to prices of 2010, you see that Milan has an average seen a plus 8% in nominal terms, but Rome, for instance, is at minus 25, and Italy is still at minus 12. And in particular, with the regeneration programs that will be ongoing, the upward and the demand for new products, we will see interesting dynamics. And it's not a surprise for what I was saying, that you can see in this chart developed by UBS that Milan is and Italy is considered among the fairly price markets in Europe, where you see green as fairly priced and red with the risk of potential risk of bubble. The case for residential investment and PRS is also because of the very specific characteristic of the Italian stock. Take the most dynamic Italian city, Milan. You see that only 4% of the buildings have been built after 1991. 94%, we talked about sustainability, 94% of the building had energetic class lower than D. And the average size of the apartments is, and we're talking on average, so the trend is biased towards the larger apartments, is about 90 square meters. Well, over 70% of the households is either single or couples. So there is really a mismatch between supply and demand, which needs to be filled in the coming years. Just wrapping up on what to expect in the coming months. In the investment side, high liquidity, low interest rate that will remain, as Tri was reminding us, will keep the cap rates very, very low, as we have seen in the recent trend, in particular for quality building. It's a favorable moment to invest in value added and development if you have, as an investor, a longer term horizon, because you're facing less competition from more opportunistic buyers. So there is the opportunity to build a long-term quality portfolio. On the rental level, prime rents we've seen are being confirmed, and we are seeing more evidence talking to brokers in the first months of the 2021. Demand will be concentrated in grade A and qualified neighborhoods. Obsolete office will need to either be upgraded or will reprice, and if there is secondary location, will be big problem. Secondary location and obsolete office to attract tenancy. The reduction of take-up is a consequence of the COVID, will remain for some months, but then tenants will see a pickup in demand. And in particular, the major driver of demand will be replacement of obsolete stock into new next generation office space. Maybe company taking less, but taking off better quality. Remote working, we have seen, we are estimating an impact around 10% in the decrease of space requirement, and again, the demand focus on qualified neighborhood. Two sectors to watch in the coming months and years, in particular PRS, as we mentioned, and of course logistics, as is already on the radar of all the major investors, given the structural trends of e-commerce. So this is the conclusion of what we expect, and I will give it back to Manfredi for his final remarks.
Thank you, Gabriele. We have very few minutes left to complete our presentation within the hour that is planned. But there are two questions, one for Sri and one for Gabriele, while unfortunately we don't have the time for the others. So Sri, one of the questions is, what do you think will be the key priorities of Mr. Draghi? Or let me rephrase, where would you like to see Mr. Draghi focus in case the Mr. Draghi government will move forward? And the other question, Gabriele, is for you, is about the way we see, the way you see the office asset class looking forward post-COVID, if it's still remaining an interesting asset class, better or worse. So Sri, to you.
Thank you, Manfredi. I think Mr. Draghi's response is going to be in terms of how, while he will not control the fiscal deficit and the debt during 2021, what steps he will take in the future. That is the one thing he would have to show, a medium-term plan for the European Union, so that he can use the 200 or 210 billion euros promptly. The second thing that he would have to do is to show a reform on the labor side, which was started by Mr. Renzi, continued by Prime Minister Paolo Gentiloni, and he would have to continue it in terms of bringing down the unemployment rate through the structural changes. And third would be on the political reform and regarding the parliamentary changes, which has already been in effect. And I think Mr. Draghi will continue with those. So if he does those three things over the next year, assuming that is how long he stays in office, that would be very positive, Manfredi.
Gabriele?
So three quick considerations on the office sector. First, we are all social animals, and talking to my team and seeing we all need to meet people, to exchange ideas. So the office space will be always needed. The second consideration is that the remote working is good because it allows more flexibility, with technology being an habilitator for having a better life, because it's not always needed to be present on a desk. You can work well also from remote, but it has to be combined. And the third consideration is that the office will still be very interesting asset class, but will be a two-tier market. Will have to be innovative, of good quality, sustainability to attract demand, and the secondary space will need to be either devalued or reconverted or upgraded in some other form.
Great, thank you, Gabriele. So it's 11 o'clock. We are within the hour. For any other questions, please write to Gabriele or myself, and we'll be happy to respond or convey the question to Sri. Thank you again for taking the time to stay with us this hour. Next quarterly call is planned for April 29. So at that time, we will know the government. We will see some of the action. Some of the vaccine will be distributed. So it will be interesting to see how the story move forward. So thank you again, and look forward to speak next call or in between at your convenience. Thank you very much.